welcome to August. I cannot believe how fast this year is flying. We are almost at December and we are really heading close and fast towards the end of the year. But this is officially a hashtag Finance Friday video, and we're not talking about how quickly time is passing. But instead, this month, we are talking all about tax. And if you had received our newsletter, you would have noticed that this month we are also talking about relaxation, because we are in the month of relaxation, and sometimes we need to just take a breath and relax. But there's nothing really relaxing about tax, right? But that being said, when you know what is expected of you, then you can actually make sure that you're taking action and implementing the right steps in order to make tax relaxing for you somehow. But knowing which tax type that is relevant to you and that is the right one for you is really the first step in making sure that you're understanding tax in your business. So we're going to be scattering some jokes through today's session. And the first one is, which superhero pays no tax? Spider-Man, because all his income is net, okay, as in after deductions, right? Unfortunately, we can't all be like Spider-Man, so let's dive straight into why tax can't be avoided. So if you think about the different types of tax, as a business specifically, we are liable for different forms of tax. So whether that's in your personal capacity or as a business. So as a business, you're liable to pay corporate income tax, which is calculated based on the total income over your tax period. So this tax period could be different depending on when your financial year end is. But companies in South Africa are liable for different types of tax, depending on the nature of their business. Now, this includes a number of different ones, from income tax to capital gains tax to dividends tax and VAT. So if we look at income tax specifically, and this is really why we're discussing tax this month, is because we are heading into provisional tax season. And at the end of this month, your provisional taxes are due. So provisional tax is not really a different type of tax. It's really just a form of collecting payment. It's almost similar to the way that you would have PAYE if you were an employee and you were earning a salary. So this helps you as a business owner to make sure that you are not at the end of the year sitting with this massive lump sum of tax that you need to pay. So it helps with a little bit of cash flow planning, but obviously also benefits SARS because they're able to collect it on a more regular basis. So if you are a company or a sole prop like myself, then the chances are very, very good that you are responsible for paying provisional tax. So you need to make sure that you're hitting that deadline at the end of this month. Okay, so let's look at the requirements of who would be defined as a provisional taxpayer. So a provisional taxpayer is any person who receives income other than a salary. So if you're not just fully employed somewhere and you are receiving things like rental income, potentially a lot of interest income. So look at that passive income that you might be building up for yourself. And then also if you're earning money through a company, so it could be your own company or you're generating profits from somewhere else, then the chances are good you will fall within this definition of a provisional taxpayer. Okay, so in terms of the Income Tax Act, the true definition is any natural person, so an individual who derives income other than remuneration, your salary, or an allowance or an advance, or who derives remuneration from an employer who is not registered for employees tax. Okay, so in other words, they are not responsible for collecting PAYE on your behalf, or a company, or any person who has been told by SARS that they are a provisional taxpayer. So now you might be like, well, why do they get to tell me that I should be a provisional taxpayer? But that is actually their right, okay? They are allowed to request that. So in terms of making payments and how this then actually works is that you make your first provisional payment within 6 months of the start of your year of assessment. And this is normally about 50% of the amount that you forecast for the entire year. And then you will have your second payment that will be falling due at the end of February, or the last working day, okay, of February of the following year. And then you will have a third top-up payment. Now, this third top-up payment is normally falls due at about September the following year, and that allows you the opportunity to make sure that you are not in a position where you have underdeclared, and allows you to make that top-up payment. This allows you to avoid penalties and fines if you have underdeclared and you compare it to your final tax return. So here's another joke. Everyone should pay their income tax with a smile. I tried, but they wanted cash. Yeah. Anyway, so, okay, as you look at preparing your tax return for this month, make sure that you are keeping clear, accurate records of your income, your expenses, and any profit or loss that you are creating and generating throughout the year. And really, really pay attention to your expenses, because that's the way that you can make sure that you're not paying excess tax, right? So there are a couple of examples of things that you can potentially deduct from your income to make sure that you are reducing your tax liability as much as possible. So the first one is basically just regular business expenses. So these are all of the costs that you incur as part of running your business in the ordinary day-to-day. Okay. Secondly, capital expenses. So this is the cost of buying equipment and machinery, could be renovation costs, could be restoration costs. These are not necessarily allowable in full right away, but you can write it off over a number of years. Then thirdly, startup expenses. So these are expenses that were incurred for business purposes just before you actually start trading, in that first year before you start trading. And then this is obviously provided that these expenses would have qualified as a deductible business expense if you had already been running. And then finally, net operating losses, so losses that you have accumulated during the year or then that have been carried forward from the previous years. Those are allowed as deductions. There are some limitations in that, but that is also something you can carry forward for you. Now, there are pros and cons of paying provisional tax, but unfortunately, it is something that just has to be done. And it's not uncommon for SARS to automatically register someone as a provisional taxpayer. They are legally permitted to do so, provided that person has not actually registered themselves, but they should have, okay? Now, if you don't check your own profile or you don't have an advisor, you might find that you missed the notification that you have been registered by SARS for provisional tax and that you now actually have an obligation. So do make sure that you are either have registered as a provisional taxpayer or that you do log into your e-filing profile just every now and then, just to make sure. Hopefully they should have given you some sort of letter to let you know, but failing that, just make sure that around provisional tax even that you check it out and see if there's something there. So if you fail to pay provisional tax, it comes with penalties and there could potentially be interest. So it could be as a result of failing to adhere to the timelines, as in not submitting it on time, or just actually failing to file it altogether. It could also be for making a late provisional tax payment, or interest on overdue provisional tax as a result of late or non-payment, plus penalties for the underpayment of provisional tax as a result of underestimating how much you pay, how much you owe them, as well as interest on the underpayment of provisional tax. So there's penalties as well as interest. It really sucks. So it can be really significant if you are not managing this well. So do make sure that you are checking it out and doing your tax calculations correctly. Okay, so if you are wanting to make sure that you're avoiding these interest and penalties, firstly, make sure that you are actually submitting your returns on time. And secondly, make sure that you are estimating the amounts correctly. That third top-up payment allows you a little bit of grace to make sure that you have calculated it correctly. That third payment actually takes place after the end of your financial year. So that makes sure that you already have accurate financial records to be able to declare your tax on. So really, this is a very important factor that you need to consider. Okay, so for the rest of the month, we're going to be looking at a little bit of the ins and outs of provisional tax, how you can potentially do it, who can help you, all of those types of things. So if we just lastly look quickly at how provisional tax links up with productivity and profitability, because that's always what we talk about, right? It allows you for your tax payment to be spread out over the tax year, which helps you to relieve yourself of the stress of having these massive last minute payments that you maybe haven't planned for. It also helps to prevent backlogs in terms of processing and avoiding auditing. So if you are splitting it up into 2 to 3 periods during the course of the year, you're helping yourself by planning and preparing your tax in a way that least affects your business's profitability and productivity. In conclusion, there's one final tip that I would like to share with you. Make sure you are collecting your paperwork throughout the year. Make sure that you are capturing it preferably online, preferably digitalized, to really make sure that by the time that you have to do your provisional tax payments, as well as your final tax payments, that everything has already been captured. If you get audited, there's information that you can provide all at the click of a button. So next week, when we're going to be chatting about ways that you can potentially do that, we'll delve into this a little bit more in detail. Okay, so that is it for this week. I hope you are starting to plan for your provisional tax payment that's due at the end of this month, and I will see you next week. Bye.